Welcome to the deep dive. Today we're going to dig into the industrial market up in northern Idaho.
That's right. Specifically, Coeur d'Alene.
Coeur d'Alene, exactly. Make sure we get that pronunciation right. Coeur d'Alene. We've got some Q2 2025 data here, but it gives us a good look back, including into the first quarter of this year.
Yeah, the report covers things like vacancy, rents, what's being built, sales activity, all the key stuff.
Our mission basically is to pull out the most important bits for you from this industrial market report for Coeur d'Alene, focusing on what things looked like in early 2025.
Let's jump in.
Okay, so first off, vacancy rates. What were we seeing around the start of 2025?
Well, the report states 6.3% vacancy as of the second quarter, and that's actually up slightly 0.3% over the past year.
Okay, 0.3%. How did that happen?
It looks like about 190,000 square feet of new space was deliveries, and net absorption was around 160,000 square feet.
So more space came online than was leased up, basically, just slightly.
Exactly. But what's really interesting, I think, is comparing that 6.3% to the longer-term picture.
Right. How does it stack up?
Well, the 5-year average vacancy is only 2.7%, and the 10 years even lower, like 2.4%.
Wow. Okay, so 6.3% is quite a bit higher than what Coeur d'Alene is used to seeing, historically speaking.
Definitely.
Yeah.
It suggests, maybe a bit more choice for tenants, potentially a little more negotiating room starting out in 2025 compared to recent years.
That makes sense. So what about just total space available, like listed space?
The availability rate, which includes vacant and soon-to-be vacant space, was 7.0% by Q2. That's roughly 760,000 square feet on the market.
And looking ahead from early 2025, construction, you mentioned deliveries, but what's actually in the pipeline now?
That's another key point. Very little under construction right now. Only 42,000 square feet.
Only 42,000. That sounds low.
It is low.
Yeah.
Especially when you consider the 10-year average for space under construction is 250,000 square feet.
Whoa. Big difference. So maybe a tighter supply coming down the road?
Could be. It suggests anyone thinking long-term in early 2025 might have wanted to lock something down sooner rather than later.
Good point. So remind us, what's the overall size of this market we're talking about?
The total inventory is around 10.8 million square feet.
Okay.
And it breaks down into, let's see, logistics is the biggest chunk, about 5.8 million square feet. Then you've got flex space, around 2.0 million, and specialized industrial at 3.1 million square feet.
Got it. Logistics, flex, and specialized. Now the big question, what about the cost? What were rents doing in early 2025?
Okay, rents. The average market rent noted in the Q2 report was around $10.40 per square foot.
$10.40 average. Any difference between those property types?
Yeah, a bit. Logistics was averaging about $10.30. Flex space that commanded a bit more, $11.40. And specialized was closer to $9.90 per square foot.
So flex space getting the premium.
Seems like it. But the really interesting part might be the rent growth.
Okay.
Year over year, Coeur d'Alene saw only 0.3% rent growth.
Just 0.3%. How does that compare nationally?
Well, the national average growth was 2.1%. So Coeur d'Alene was lagging behind quite a bit.
And within the types, logistics, flex.
Logistics rents were up just 0.2% year over year. Flex saw 0.3% and specialized 0.4%. So pretty muted across the board.
And compared to, say, the last 5 or 10 years in Coeur d'Alene itself?
Right. Good question. The 5-year average annual growth was 4.4%, and the 10-year average was 5.0%.
Okay, so definitely a slowdown in rent increases as of early 2025.
Noticeable cooling, yeah.
Interesting. So even with higher vacancy, rents weren't exactly dropping, just leveling off.
More like slowing their climb significantly, yeah. Now let's talk about leasing activity. How much space was actually getting snapped up?
Good idea. What did net absorption look like leading into Q2?
Over the 12 months prior to Q2 2025, the total market absorbed about 155,000 square feet. Net absorption, remember, that's occupied space minus vacated space.
Right, 155K over the year. What about activity specifically in Q1 2025?
The report does highlight some specific buildings with notable absorption in Q1. For instance, 4378 Selway Avenue in Post Falls absorbed over 51,000 square feet.
Okay.
And 4415 West Hargrave, also Post Falls, took down nearly 40,000 square feet. Plus, this Saltus Way property in Greater Coeur d'Alene saw about 37,000 square feet absorbed.
So Post Falls seems like a hotspot for activity.
It does. Even with higher overall vacancy, specific properties were clearly in demand in that first quarter.
Were there any major leases signed in Q1 that the report mentions?
Yes, it notes some key deals from the past year, including Q1 activity, like 16809 West Prairie Ave In Post Falls, that was over 27,000 square feet.
Okay.
And the 764 South Clearwater Loop, also Post Falls, about 10,600 square feet. Plus some smaller deals mentioned at Belanca and North Government Way. Shows activity across different size ranges.
So deals are definitely getting done in early 2025. Let's go back to that construction number. Only 42,000 square feet. Where is that happening?
It's split between just two projects, actually.
Two projects.
Yep. The bigger one, 36,000 square feet, is in the Hayden-Dalton Gardens area. That was slated for completion around May 2025.
Okay, and the other?
The other is a smaller one, just 6,000 square feet over in Post Falls. And interestingly, that one was already 100% pre-leased.
Fully pre-leased. Wow.
Yeah, that really tells you something about demand for the right kind of, maybe smaller, new space, especially in Post Falls.
Definitely highlights Post Falls again. Okay, let's switch gears to the investment side. Sales activity. What was happening with properties trading hands leading into and during Q1 2025?
All right, sales. Over the 12 months leading up to Q2, 20 industrial properties were sold.
20 sales. How much space is that?
That represents about 150,000 square feet changing hands. And the total dollar volume was around $6.6 million.
How does that compare to previous years?
It's interesting. The average annual sales volume over both the last 5 and 10 years was also $6.6 million.
Yeah.
So the total value was pretty consistent. But the amount of square footage turned over, that 150,000 SF in the last year, is actually higher than the 5-year average of 96,000 SF and the 10-year average of 120,000 SF.
Huh. So same total money spent, roughly, but more actual property changing hands recently. Maybe smaller deals or lower prices.
That could be a mix of factors. Let's look at pricing. The report estimates overall market pricing around $109 per square foot.
$109 per square foot.
Logistics estimated $113 per square foot, Flex higher at $129, and Specialized lower at $89.
Okay, Flex getting the premium again, like with rents. What about cap rates?
The estimated market cap rate was 8.6%. But looking at the actual sales over the past year,
Yeah.
the average price paid was quite a bit higher, $227 per square foot. And the cap rate on those deals was also noted, though not specified here. There was a huge range in those sales, though.
A bigger range.
Prices went from about $530,000 up to $3.76 million. And price per square foot was anywhere from $84 to $452.
Wow, $84 to $452. That's enormous variation. Depends heavily on the specific building, location, tenant, I guess.
Absolutely. Quality, age, lease terms, everything. The report does mention a specific sale late last year, December 2024, at 4415 West Grange Ave, which sold for $150 per square foot. And it notes other sales occurred in Q1 2025, just without all the pricing details in this summary.
Right. So an active sales market, but with very diverse pricing. Now, let's zoom out for a second. What's the bigger economic picture in Coeur d'Alene? What's driving things?
Well, Coeur d'Alene's definitely growing. Population is up. The economy's shifted, less logging and mining focus, more towards tourism and other sectors now.
And Idaho overall is growing fast, right? Lots of people moving in.
Huge growth, yeah. A lot driven by migration, especially from places like California. Key local employers are folks like Kootenai Health, the Coeur d'Alene Resort, Bread Financial. Hecla Mining is still significant too. That growth context is important backdrop for the industrial demand.
Definitely. And within Coeur d'Alene, you mentioned Post Falls a lot. Are there distinct submarkets we should know about?
Oh, yeah. There's the CBD, Greater Coeur d'Alene, Hayden-Dalton Gardens, Kootenai, and Post Falls. They all have different amounts of inventory, different average rents, vacancy levels.
And based on the Q1 indicators, Post Falls stood out.
Yeah, Post Falls has the most inventory overall, and like we said, saw strong absorption leading into Q2. And Hayden-Dalton Gardens had that one non-pre-leased construction project. So different dynamics at play in different areas.
Helps to know the local nuances. So thinking about supply and demand overall in early 2025, what's the balance look like?
Well, looking back over the year to Q2, we had 190,000 SF delivered and 160,000 SF absorbed.
Supply slightly ahead.
Right. And if you look just year to date through Q1 2025, it was about 14,000 SF absorbed and 35,500 SF delivered.
So supply was still outpacing demand slightly in those very early months of 2025.
That seems to be the picture.
Okay, let's try and wrap this up. Can you summarize the rent and vacancy situation as we saw in early 2025?
Sure. Big picture. Vacancy at 6.3% was higher than historical norms. Rent growth was moderate, around 0.3% year over year, but slowing down. Market asking rent overall was about $10.35 per square foot by Q2.
And breaking it down by type again?
Logistics had the highest vacancy, actually around 10.1%, with rents near $10.26. Flex space was much tighter, only 3.0% vacancy, and rents around $11.38.
Wow, tight flex market.
Very tight. And specialized industrial was even tighter, just 1.2% vacancy, with rents around $9.85.
Okay, that's a really helpful breakdown. So, to summarize our deep dive on Coeur d'Alene Industrial in early 2025, key takeaways are higher vacancy than usual, sort of sluggish rent growth, not much new building happening, but still an active market for both leasing and sales. Those sales prices varied a lot.
That captures it well. A market finding a bit of a new balance, it seems, with more options available but still solid underlying activity.
So, a final thought for you, the listener, to chew on. Given these trends, the higher vacancy, slower rent growth, limited construction pipeline starting 2025, what might that mean long term for businesses looking to set up shop or expand in Coeur d'Alene? And, what other factors might really shape this market through the rest of 2025? Definitely something to watch.
Absolutely. And look, if you need more detailed data, specific building info, that kind of thing, these market reports are usually the starting point. Always good to dig deeper if you have specific needs.
Good point. Well, thanks for joining us for this deep dive into the Coeur d'Alene industrial market as it looked in early 2025. Hope it gave you some useful insights. And if you do want to dig deeper or have specific questions about this data, you can actually reach out to Eric Peterson. His number is 509-903-9077.
Yep. Eric Peterson, 509-903-9077.
Thanks again for tuning in.